Good evening, everybody. Good morning to everyone in Australia. I hope you're doing good. I am Mark Sebastian. I am your only option. Welcome, welcome, welcome. I was watching that opening with you guys, the opening we use, and it just dawned on me that we're going to have a new opening here pretty shortly, aren't we? Because today is the big debut. My good friend and probably one of the 5 smartest traders I've ever met in my life, Tim Colby, along with Hannah Seltner, are going to be with you guys shortly. So we've got a nice crowd here already. Hope everybody's doing great. Where are you coming in from? Let me know. Where are you? I am in Austin, and it just absolutely, like, the heavens unloaded on the city of Austin just 5 minutes ago. Yeah. No, Hans is in that. Modesto, California. All right. Good to see Altman. Cloud Cities in Colorado. Makes sense. Reverb and feedback with my audio. I will turn my gain down. Now, cold prep, it is possible that you have 2 of these occurrences open. If you're hearing a reverb, a lot of times it's because you have 2 of the same window open with sound. That can often happen. All right, we got Bob W. in Southern Cal, Mike in Tucson, Chris in Connecticut, and Christopher is in the mountains of Arizona. Human, Southern Cal at the moment. Where are you normally, Human? We know you are. All right. Double marker, nothing. There you go, cold prep. Good to see you. Great to see everybody here. I'm really excited. I am really excited. I got about 6-7 minutes here. Let me first tell you about Tim. How many of you know this? I'm sure some of you do, but I met Tim my very first day at work. I'm not kidding you. I met Tim the very first day I started working. It was June 7th, 2001. Might have been June 8th. Might have been June 8th. And he remembers being in an elevator with me. I do not. But I do remember sitting at the office table and us all sitting around filling out paperwork. Now, we were entering a training program. They'd hired myself and Tim and 20 other people. Today, you're going to learn about a gauntlet, and I'm going to tell you Tim's first gauntlet. We started out with 22 people. 7 of us managed to get on a badge, which means we graduated from the training program and got to trade on our own. Within a year, there were 4 of us left. And best I can tell, we were the only 4 that really made anything of ourselves over that period of time. Myself, Tim, a couple other people. That was what was required of us. And then, I move off to New York, or I move away from New York at the end of 2003 and move back to Chicago. And then I reconnected with Tim when I would visit New York. And then he announced, hey, Mark, I'm moving to Chicago. And that's when our friendship really went from work friends and teammates into legitimate friends. Anytime I'd visit, he'd always welcome me back to New York. And then him coming to Chicago, he had a lot to learn about the city. And my wife and I were very happy to introduce Tim to the city that I love so much. And, his wife and my wife ended up having friends. We have kids that are around the same age. We basically have gone from fresh out of college to mature adults with families together. And of that group of 22 people, the only person I talk to out of that group is Tim. So he is something special. And I think you guys are going to learn to appreciate that tonight. Now, let's talk about what he's built. I like to say there are two kinds of traders that were successful, right? There was me. I got to the office around 7:15. Yucked it up for 10, 15 minutes, checked the news, made sure I had all of my positions and all of my quote streaming stuff set the way I wanted. And now I was ready to go. And then there were people like Tim. Tim was the guy that showed up in between 5:30 and 6 and spent an extra hour and a half researching, studying, becoming better, understanding what dynamics could affect the ETFs he was trading. That was kind of where he started his macro journey. We were not the same. We got along, but he was a completely different animal than me. So when I brought him on board here to Option Pit, I had the same assumption that it was going to take a little bit. So he started working with us in February. And so what you're about to witness is 6-7 months of tedious hard work to develop something that is useful to every single person I know that is a trader. And so he's developed this gauntlet that you're going to see and learn about tonight. And I'm going to tell you how I use it, because I do. When Tim gives me suggestions, I listen. And I like to think he does the same with me. He developed this gauntlet, and the way I use it, the way it is valuable to me is take Delta Strike. All right. I run a service called Delta Strike, and I trade off of large block order flow. So the first thing I do in the morning is look at what's on that gauntlet, and I see what sectors are strong, what sectors are weak, what sectors are neutral. Then I start looking through order flow. So let's say that a specific sector is weak according to what Tim has built. Do you think I'm looking for calls? No. And if I see a large block of calls, I'm going to probably move on. But what if I'm looking at, let's say, I'm looking at calls on, somebody pick a stock, Apple. And a customer bought 50,000 calls. Normally, that'd get me really excited. Now, I can look at what Tim has built, and if it's saying that Apple has momentum, or the sector that Apple is in has momentum, well, guess what? Now I'm not just excited, I'm elated. I'm elated. And it has application for things, Leisha, an option shopper. A lot of what she does is momentum. What Tim's built can guide you and guide her to maybe not go for a bull play in something that has weak momentum. Or to look at a specific sector and look at the stocks within there for where there is momentum. It can help with Hans. It is application of what Andrew's doing. Basically, if you're a professional trader, you're a part-time trader, you're interested in trading, what he's built will dramatically improve your ability to view the market, absorb what is going on in the market, and develop actionable ideas. And those are on top of Tim's great ideas that are inside of this. And I can't wait for you guys to learn all about this. I got to tell you, I have not been this excited for something we're doing here at Option Pit in quite some time that I'm not involved with, right? When it's me and we're launching me, okay, I probably get more excited because it's me. Don't we all? Something that really I'm just a beneficiary of. It's the most excited that I've been in quite some time. So I can't wait for you all to feel the excitement that I feel, and I know you are. So I asked everybody earlier where they're from. Oh, never mind. There we are.
Hi, Mark.
Who's excited?
Hi, everyone. How we doing tonight? Happy Thursday.
Happy Thursday.
Soon we will have football season, and we will have to move these up.
I know.
I think there's actually, is there a preseason game tonight? I think there is.
There is.
This will be more fun. Tell you what.
Yes.
Looks like we have a good crowd, around 200 here so far. If you can, tell us where you're coming in from in the chat. We love to hear from you guys, especially if this is your first Option Pit event, or maybe your first time meeting Mark or your first time meeting me. First of all, it's nice to meet you. Let us know that you're new. We love meeting new friends here.
Yes, we do.
Mark, I'm sure, introduced himself several minutes ago, but there's more people here now than there were before. Mark is one of the co-founders of Option Pit, which is the boutique trading education firm where all of our traders work. So if you learn from Leisha, if you learn from Hans, if you go to State of the Market, if you go to I'd Trade That with Garrett in the mornings, we are all under the Option Pit umbrella. So we're super happy you guys are here. Thanks for making some time tonight. Mark, what are your plans tonight? You sticking around to watch Tim for a little bit?
Is the Pope a Catholic? Yeah, of course I
am. Did you see? I know that you used to live in Chicago and so you have a close tie. Did you see that at a Cubs game they did a Pope
that
night?
That was at a Sox game.
Oh, it was a
White Sox game. Yes.
A White Sox, but they did a Pope night and they were all wearing the, I don't want to guess, I can't remember the term, but I thought that was so great.
Yes. And actually what was funny, in between, in the middle of the fifth, they did a sign of peace. They had everybody turn around and shake hands. And then believe it or not, I know the priest that was there. One of the priests that also happens to be a Sox fan presented him with the Pope hat yesterday in the Vatican, and he was very excited. He was at the 2005 World Series when they won it. He is a legitimate White Sox fan, Bears fan, and as you may or may not know, he went to Villanova, my alma mater.
I did know that.
And so, he is a huge Villanova is playing Notre Dame in front of the Pope on November 1st.
The White Sox must really feel like they have a powerful force on their side.
They do. They do indeed.
William, welcome from Indianapolis. So glad you're here. Brett says the Pope hates the Cubs. Yeah, that's probably true. My flub. My bad. Fran from Covington, Louisiana. I love Louisiana. I would love to go back to New Orleans sometime soon. We've got Joe from Madison. Hi, Joe. Thanks for coming. Yangsta's a regular.
Mm-hmm.
Ronald thinks I'm a Bears fan. Ronald, you're actually wrong. I am a Broncos fan because I'm from Colorado originally,
Yes.
which is where the man of the hour, who we'll be bringing on in just a minute, Tim Colby, lives right now. So,
Yes.
Jim from Oregon, welcome, Jim. Thanks for being here. Ronald, you're a Broncos fan too? Look at that.
You know?
Making
Yeah,
new friends
we got a few
already.
people in Colorado that are floating around. And yeah, it's great to see everybody.
Who is
Uh,
excited to hear from Tim? We have been talking about Tim for a couple weeks now, and what he's built tonight has taken over 6 months and probably hundreds of hours. We'll talk to Tim about it tonight to put together. And I genuinely believe that what we're going to show you guys tonight has applications for every single type of trader out there. No matter if you're a zero DTE or no matter if you're an options adrenaline junkie, no matter if you prefer swing trades, longer term trades, if you only love trading biotech, whatever. What Tim's going to show you tonight has applications for everyone. And it starts with the macro gauntlet, which is what we're going to show you and what Tim has spent so much time building. So I'm really excited. We're excited too. I love it. Throw some dollar signs in the chat. I love seeing it. We'll bring Tim on in just a few minutes here. Mark, I heard you earlier telling the story of meeting Tim in the elevator.
yeah.
The one thing I didn't know about that story was that Tim remembers it and you don't, which I find to
Yeah.
be very funny.
I remember meeting him I remember sitting at like our first day and filling out all the paperwork when it's your first job.
Yeah,
But I didn't remember the elevator thing until he told me.
that's
So
great.
pretty funny.
I love it. I do want to give a quick shout out to, so when you guys signed up for tonight's event, after the first page where you signed up, you should have noticed on the second page there was an option to become a VIP attendee. It was like a $9 fee. We did a couple special events with the VIPers the last few days, and there's some other perks that they get, including there is a VIP room where some of them are watching tonight's presentation in more of a small group setting. So shout out to the VIPs. I see you guys in the VIP chat. Michael, Nani, SNPR Baker, who had some great questions the other day, Montana Mike, Flash Trader. Just wanted to shout out some of you guys in the VIP room. I will be looking there first for some of the questions for tonight. So I'm not ignoring the regular folk, but I will be looking at that VIP room to answer and chat with some of you. So welcome, VIPs.
Yes.
All right, Mark. It's 7:10. I think I'm going to get the ball rolling here.
We should.
All right.
So, folks, I'm going to bid you adieu. Make sure, pay attention. Now's the time to turn off your television, turn off Facebook, whatever, Instagram, TikTok, whatever you're doing. Either open a Google Doc and get ready to type notes, or get your pad and paper out and get ready to take some.
Or Post-its. This is what I do.
Or
Post-its and a Sharpie.
Post-its and a Sharpie like Hannah. And get ready, because as we always try, you're going to learn a lot during the presentation, and I can't wait. So Hannah, take it away.
Thank you, Mark. Christian, you can pop up my screen if you can see it. Perfect. Guys, give me a thumbs up in the chat. Let me know you can hear me okay. If you see me looking to the side here, it's because I'm looking at the chat and I'm looking at your answers. I'm not ignoring you. So that's what I'm looking over to over here. I want to welcome everyone to the big reveal. Tonight, you will be learning more about Tim Colby's macro gauntlet. Now, I'm going to give you a bit of an intro, and then we'll bring Tim on and we'll get right into going through the macro gauntlet, and we're actually going to show it to you here tonight. So thumbs up. I love it. Tim's trading style is macro at origin, but if you think about it, really every trading style is macro at origin. Any smart trader wants to know what copper, gold, energy, the SPY are doing and how they're moving, because it is the market. It is your trading. Whether you know it or not, all of these factors affect the way you trade. So earlier when I said this applies to everyone, that's what I mean. And tonight, for the first time here at Option Pit, Tim has put together a way to show you the fundamental assets that move the market. Because like it or not, even if you're a diehard trader, everything that happens for you trading downstream starts at those fundamental assets. So for serious traders, for people like you guys who are here tonight, taking time out of your week to watch this, people that never want to get blindsided by the market, understanding the fundamentals of the largest assets in the market is the number one thing that we talk about every day. Andrew, Mark, Hans, every day when we meet in the morning, we meet every morning at 9 a.m. If I come to the call 2 minutes late, that's what they're already talking about because it affects all of their trading. Now, the easiest money to make in the market is built off of the strongest data sets. What does that mean? I'm going to show you some numbers in just a second. And the assets that Tim has incorporated into the macro gauntlet are based off of 20 years of data. So let's get into that, and I'm going to show you some numbers. But I wanted to first preface this because I want everyone to understand that understanding macro is not something to roll your eyes at. Macro is like, it's like the tide, it's like the sunrise. It's going to happen. It's not if it happens, it's when it happens. So understanding that is only going to improve your trading. This is our option pit disclosure. We show this to everyone before we start an event. If you're a first timer, let me just walk you through this. The information you're going to see tonight and any decision that you make based off of the information you see tonight is 100% your choice, your responsibility. What we do here, working with pro traders, is they will show you the strategies they use, coach you through how they use it, but we're all adults here and anything you decide is still your decision. So I'm going to show you guys some big numbers. Here's the first one. 7,560,000. That's the number of data points that Tim went through to put together the macro gauntlet. Now, he didn't do this manually. He did it with the help of some AI and some team members here at Option Pit, which we'll talk about in just a little bit. But how did I get that number? Well, there's 252 trading days in a year. Take 20 years of that, times 10 ETF sleeves, which we're going to talk about. Those are the basis of the macro gauntlet, times 30 macro forces inside each of those, times 5 technical forces inside each of those. And that's how you get 7.5 million data points, which is a lot. From that 7.5 million, and this is what Tim has spent the last 6 months doing, this process. How do I take all of this information, all of this data, some of the most reliable, solid data in the market, and turn it into a strategy that anyone can use? From those data points, he got 1,500 back-tested trades. From those, since May 5th, he has made 38 real money trades. And since May 5th, in his own real money trading means it's not paper trading. He's not faking it. He actually funded an account and really traded this strategy that he put together. He has 13x'd the S&P 500 since May 5th. So let's see the proof and let's talk about the macro gauntlet. Are you guys excited? Let me see some more thumbs up. There's over 200 of you here. I'm so excited you guys are here. I can't wait to show you this. Tim and I have been working for the last week putting this together tonight. So let's talk about him a little bit before he shows up. How about that? If you don't know Tim, he's a 25-year market veteran. Yes, he met Mark in an elevator on one of his first days on the SIBO. He started at the American Stock Exchange, where he was a market maker, and then he moved to the SIBO. That was where he met Mark. While Tim was on the SIBO floor, he had no losing years, and he traded ETF options through the 2008 crisis, which actually was a personal best year for him. That's really important because the macro strategy that Tim's going to show you here tonight, one of the big pros of it is that it's able to avoid, maybe not 100% avoid, but at least reduce the drawdowns during moments like 2008 and during moments like COVID. Tim was one of the biggest off-floor market makers in commodity ETF options from 2010 to 2013. He was also part of a founding team at, there's some X's here, Tim will fill this in when he joins us. But he worked for a macro trading fund that grew from 3 million to 250 million assets under management in 4 years. Okay. They beat the benchmark 4 years running. Tim always jokes that the biggest trade of his life was stepping away from his job to spend 7 years raising his 3 boys, which you'll see here, and his wife. They live now in Colorado. You can see him enjoying the outdoors. And now he works at Option Pit. Tim started at Option Pit back in February, so he's been here for about 6 months. And we've been talking all the time to build what we're here to show you tonight. So, Christian, if Tim's here, let's bring him in. Tim, welcome.
Hey.
Hi,
How are you doing? Boy, my ears are burning.
Are they? I was just talking about you a lot.
Yeah.
I did have a bit of data that was missing here. Can you explain? I know you worked at a macro trading fund.
Yes, sorry.
Can you talk about that a bit?
That was Bluegrass Capital. So that was yes, it was a CTA. So now to get a little nerdy on you, CTA is a commodity trading advisory. That's not a hedge fund. It's in the futures markets, and it's regulated by the futures CFTC. So I did trade futures. We did raise capital, regulated. Boy, I got to tell you, getting regulated, not regulated in research, but having to go through all the paperwork, all the lawyers, all the stuff, the accountants, not fun. That's the not fun part. That's actually why I'm coming back and I'm at Option Pit and not raising money, because this is fun. Like, this is the fun part. Mark called me up and he beat the hedge funds to me. And he said, come to Option Pit. This is going to be fun. And I'm like, really? I go, Mark, you're a fun guy. All right, let's give it a whirl. And we went back and forth. We talked a lot about it. But yes, at Bluegrass Capital, we did start, and it was literally bootstrap. We start just from a trading idea, which is the foundation for some of the ideas that I got here. The partner that I had at the time is where I learned macro, and I owe everything to Jason. He's still in the markets, good friend, but boy, that's when I learned a lot of the macro stuff, and it kind of revolutionized the way I traded. And it's what I wanted to bring to Option Pit. It's the thing I wanted to be able to show everybody. Macro gets a bad rap for being really complicated. And guess what? It can be really complicated. Sure. It can be really complicated. And so my whole idea here was to try to bring it down, distill it into a subsect, into a approachable way, because it can be used in an approachable way. There are ways to simplify it to be able to use it on a day-to-day basis.
One of the things that I think is important, and you and I have been talking about this a lot today, is what we are going to be showing people tonight. And first of all, we're so glad that you are here. Thank you for being here.
Absolutely.
One of the things that you told me a couple months ago when we started looking at this was that this is something, what you put together and what we're going to be showing tonight, the macro gauntlet, is something that you have always wanted to build. Can you talk about that a little bit?
I have been dreaming about this. It's been floating in my mind for so long, right? When you see the macro markets, you see all the moving parts. How complicated can it be? How many inputs are there? Oh my God, it's too much. It's funny. And I don't know, we'll talk about this maybe a little bit later, but when I was trading macro, I told my dad what I was doing. I'm like, hey, I moved off the floor. This is the new style I'm trading. It was really complicated before. All the ETF stuff, I was a big options ETF trader. All these ETFs we're talking about, I traded options on those. But when I went to macro specifically, I kind of explained what I was doing. I trade gold, and we trade currencies, and we trade, the indexes, and we trade the grain markets, and we're trading everything. And he's like, yeah, nobody can look at everything. You can't look at everything all the time. I said, well, we're trying.
I'm going to try.
We're doing our best. And we did our best. We did very good. We did beat our benchmark. We beat our benchmark. We were in the top 1% of return to drawdown ratio over 2,000 funds. So it was not nothing. It was a great ride. It was really fun. It was an immense learning experience. And it's something that just transformed. Learning this macro has transformed the way that I approach the markets.
A lot of people, when they think macro, I think have some misconceptions. So let's start a little bit at the top here. When I think big macro, one of the first things that comes to mind is like the S&P 500. That's all the stocks across the entire market. Would there be any better place to trade macro than to trade there? But what we're going to show over the next couple of slides here for everyone is we're going to use the S&P 500 over the last this is really, I think, goes back to like 2006 is the performance you can see
Yeah, it
right
goes
here
to
on this white line.
2006. Exactly. The reason I went back to 2006 is because that's when they listed these ETFs. If I had data going back to 1990, I'd have done 1990.
Sure.
I'd have gone to
Sure.
1985. I'd have gone all the way back as far as you could go, because I believe in these things hold through ups, through downs, through different cycles. That's really important to me, is to sort of weather test these things over time.
Yeah. So using this kind of as our beginning benchmark, Tim, and you guys can obviously see on here, there's two pretty large drawdowns that you should remember. 2008 obviously is one of the deepest drawdowns on this chart. And then if you look at 2020 during COVID, there's obviously quite a bit of a drop there. But Tim, one of the first things that you did when you were putting together the macro gauntlet was you wanted to reduce kind of the drawdowns that you might see on a chart like this, and also try to get more upside out of it. So
exactly,
talk to me about this line that I see on here now, this blue line. What is this?
Right. So again, looking at the line, the top line. So now we're getting into a lot of lines. The white line, again, this is the S&P 500, and it's important to note this is a non-compounded return. So I don't want to get into the nitty gritty, but the idea, we all know compounding returns over time are so powerful, and that's a totally different conversation. I wanted to do non-compounding because when you compare two studies of two different trading strategies over a long period of time, what tends to happen is if you have a compounding return, towards the end is where you start to see a lot of the returns. And then the very beginning part of the strategy, it gets noised out by all the compounding. So it's not a fair comparison.
Sure.
And I don't mean to say this, but if you put mine on a compounding return, the S&P, it wouldn't be close. So this brings it a little bit more towards apples to apples. So what we have here on the top is the equity curve. You can go back one slide.
Oh, sorry. I'm ahead of myself.
Right.
There you go.
Yeah, the equity curve, basically it's the daily returns added up over time. So if you were in this strategy on day one, or if let's say you entered on day 1000 and you started doing this strategy every single day and you added up those returns, that's what that little line would be, the blue one. And if you did it in the S&P and you bought every single day and then you held those returns every day, that's what you would have added up over time. The bottom set of lines is how much percent return you would experience if you were to do that strategy. How much would your account go down? And that, for me, as a system builder, is a really important metric, because it tells you how much you're going to have to weather. How much for the upside that you want are you going to have to sit through? Because there's always a trade-off, risk and reward. That's what you deal with. So when you're comparing two things, you want to look at not only their upside, you want to look at their downside. And that's what these two charts show. And what you can see here is when you use something like the macro gauntlet, right? When you have an active strategy, you can dodge and weave, and you can get in when the forces are in your favor, and you can get out of the way when they're going against you.
Right.
And what you end up not doing is you end up not sitting through 2008 all the way down, or 2020, you don't sit all the way through that, or 2022 to 2023, you don't sit through that other big drawdown that you see there is about 30-something% on the S&P.
Right. So how many of you guys here today, I just want to ask a quick question to the room. How many of you guys know what sector rotation is? The idea of sector rotation. So there's kind of buy and hold is in one camp. Another camp would be buy and hold and like grit your teeth and just get through it and it's going to be fine, which is sometimes how financial advisors can approach things. They're like, well, just wait. It's going to be fine. Just wait. And it's mostly true that if you wait long enough, it will be okay. But there's a lot of gritting your teeth and getting through those drawdown periods. Sector rotation is a second approach that basically money doesn't leave the market. It's sort of like mass. It's not, it just changes form. It doesn't actually get deleted permanently. So money in the market moves to other places. Sector rotation is this idea that I can kind of bounce around from one large piece of the market to another piece of the market strategically to outpace the returns of just buy and hold. So to reduce these lines, to explaining them very simply, I would say the white is really more of a buy and hold approach. And then the blue is more of the beginning of a sector rotation approach, which is what Tim's macro gauntlet is based off of.
Yeah, and I like to see, I'm going to interrupt you. I'd like to see a lot of people in the chat, they're familiar with sector rotation. And I think that's really important. I think that's good that you're all looking at that. What you're going to be surprised here is this is a different take on sector rotation.
Yes.
I'd be surprised if you've seen something like this before. But I just wanted to say that. So when you start, maybe you give me a little side eye, give me a second to walk through the process, because it is a little different from sector rotation, maybe how a financial advisor might do it, or traditionally it's done. It's also different from traditional macro, which I think some macro people will find entertaining.
So Tim, explain what this third line is and this fourth line.
Okay.
Let's keep moving.
Yeah. So one of the cool things about having a strategy that doesn't sit through so many drawdowns and you have a lower volatility, you can actually increase and press the leverage on that. So you can increase your risk that you have. Now, on average, the macro gauntlet is not long all of the sectors. It's not just long them all. It will go to cash when it has no signal. And what that ends up leaving you is, on average, about 4 sectors at any one time is what it's long. And so 60% of your funds that you would have are just sort of sitting there. And what that gets you is, it gets you a lower volatility versus the S&P. It also gets you a lower drawdown. And what you can do is you can take that extra money, or you can leverage the return to try to push the volatility of the strategy to match the S&P, to sort of get it more like the S&P 500, to get it a better experience, a better volatility.
This actually looks way above the S&P, to be honest.
It is way above the S&P.
Right.
And it does start to approach a more day-to-day what you would feel. So the volatility, if I had $100,000 in the S&P and it has a 16% volatility on an annualized basis, I think over 20 years, I think the number there is 19%. You would experience about a 19% swing in your about $19,000 back and forth is what you would experience over the course of a year. Then you drill that down, you can look at that on a day-to-day basis, how much money you would be flowing. So what I wanted to do is I wanted to get the macro barometer is a much lower at its core at a 1-to-1 on a volatility basis. So you're not going to experience very much, but that allows you to push the leverage. It allows you to press a little bit because the drawdowns are less. So you can start to press to make more. You can use this in a very conservative way, but you can also, like I have, started to press it hard. And I've started to press it pretty hard using options. And what I found is it was 2.7 times you could press this to get it to equal what the S&P would equal. And when you did that, the returns were about 2.5 times to 1. So about a 24% average over the 20-year period versus the S&P on this is a 10% average over a 20-year period.
All right. So let me sum this up. Okay. Guys, you with me? Pay attention. This is important because it sets the stage for why you should care about this strategy. We're showing you the potential of using something like the macro gauntlet and what it can do for you. So the white line, we got the S&P 500. That's just buy and hold approach. Okay. The blue line, the one that's kind of going up and down against the S&P 500 line, that's the macro gauntlet. So that's what we're going to show you today. Now, the additional 2 lines above that end higher on the right-hand side of your screen, that's using leverage inside of the macro gauntlet, which is basically trading options. Okay. So give me a thumbs up. Give me a yes if that makes sense. I want you guys to understand the differences between buy and hold, sector rotation, and then sector rotation with some leverage, because that's really the difference between each of these lines here. And when you hear leverage, you should just think options. And that's what we're going to be showing you guys today, because this is basically like sector rotation on steroids. If you want to think about it like that, we're really trying to juice the most out of every return, out of every rotation. Okay, good. I'm seeing some yeses. I'm going to keep us moving here, Tim.
Thank you.
This line here, the green one that we were just looking at, that is the macro gauntlet.
Yes.
There's actually, just to complicate things further, there's a bunch of lines inside of this green line. So let's talk about what those are. If you want to walk us through this, Tim, these kind of decisions that led you to picking these ETFs or these big, when I talk about, guys, the biggest assets in the market, this is what I'm talking about, okay? And you're going to hear us talk about them as sleeves. So let's start with this, Tim, because this was the first kind of big decision that you made in the macro gauntlet was, what the heck do I include in macro?
Right. So the way to break it down, you can break the S&P down into different sectors. And there are tradable sectors, sector ETFs. I made markets in them for a decade, and I know them very, very well. I was the market maker for them, and so I understand them very well. So we have 10 different sectors that are here. Healthcare, materials. I can go through them all. You can read your screen. But it's important because these hold the biggest companies that you know about, right? This is how you break the market down into sectors. So you have the industrial sector, utilities, consumer staples. When you lump all the companies together in the different sectors, you get a flavor. They tend to trade together very similarly. They also tend to move together and then are also influenced by the same forces from the outside. And that was the really important thing, is that I wanted to not just how can I beat the S&P by trading the S&P. There's a better way. There's different forces that impact different sectors. We call them sleeves at different times.
I mean, how many of you guys here trade ETFs? You might trade more popular ones like the SPY or like the Qs. Some of these might be new to you guys. I mean, the most popular one that you probably know from this list has to be, I would guess, XLE, which is energy. XLE has been on an absolute tear over the last few months, part of which the macro gauntlet that we're going to show you actually caught, which is very exciting. But these ETFs might be new to some of you, and honestly, that should feel exciting because this is unlocking a new opportunity for you, both in trading these themselves and also in an understanding how these ETFs and the way that they move affect the rest of your trading, which is something that we're going to talk about a little bit later. So just going back for a second, inside of this green line that you're looking at right here is the performance of these 10 ETFs, which we call sleeves. You'll hear us refer to them as sleeves tonight. If you have a piece of paper or something, you might want to write down sleeves. That's what we're going to talk about. Sleeve equals ETF. Keep that in mind. So inside of that green line is actually all of these lines, which looks nuts. But what you're looking at here, guys, is the individual performances since 2006 of each of those sleeves. So Tim, you want to highlight a couple pieces of this that people should pay attention to?
The first thing I want to highlight is that my 10-year-old got a crayon and he drew that line.
It looks about like that, huh?
He got in there, and Henry got in there and started drawing on the paper. I said, all right, sweet, let's strip that out and mail it up. We're good. No, it does look like a hot mess. And I tell you, when I was running these one at a time, I thought, oh man, that's okay. That's okay. But then I was like, I'm going to do another one, and we're going to do another one. And when you blend them all together is what you get that other green line that we looked at before. And we'll talk about that later about how that happens.
Sure.
But when I say, oh, that's kind of a hot mess, what I mean is back in 2008, 2008 was a housing crisis. So not a lot is going to save you if you're in the housing market. I can build and go back test a strategy that would have avoided the drawdowns that happened in 2008 for the housing market, but that would have been curve fitting for that one specific period of time that basically was a generational anomaly. Could we have that happen again? Yeah, that could happen again. But I don't want to just make every trading decision I have based on one event that happened 20 years ago. Right. I want to account for it for sure, but I can't have it affect 1,500 trades. I can't have it affect all that stuff. Now, if you notice, there's another big drawdown that happened around COVID. That was an anomaly around the crude oil markets. Anybody trading long enough will remember the crude oil went negative, and you cannot model crude oil going negative. And if you try to do that, you're going to have a really weird system that's just not going to work. And so the idea here is that I took the ideas spread over 20 years, and there are going to be times when you get hit, right? That just happens. But what you notice is not only does that not affect when you collectively take all of the returns, back in the other line that we saw, the drawdown, when added in, it wasn't as bad. You also have these same products that got worked in those periods of times have some of the better trends that you can catch.
Yes.
So XHB, for example, has, one of the better returns in the entire system, including the time that it got run over.
Right.
XLE was one of the best returns through this Iran war. I mean, whereas where the market, it didn't go hide there, it went there to go profit. There was all the signs for crude, and it was long crude through the whole market. And that's, you can't go back in time and create a set of rules that are going to capture one event that happened ever, because That's not real. And those events, you have to play from a wide, you have to cast a wide net that is going to generally play out over general long periods of time. That's just how you do things.
We're showing you guys all of this to demonstrate a couple fundamental truths here, okay? First of all, money does not leave the market. It's moving into other sleeves. So there is a rotational element here. And the second one is that a comprehensive strategy and a comprehensive approach to trading macro has to incorporate all of these sleeves together. It must include all 10 of them. So that's why Tim designed the strategy this way. We're going to get in just a second to the individual sleeves, but before we do that, for you guys that are here, Tim put together 5 kind of fundamental truths of macro trading that he wants to teach you guys. And these are things that you guys can use in your own trading as soon as tomorrow. So pay attention to these. Tim's going to take 2 minutes going through these, write them down. But these are things that you guys can use to help your trading as soon as tomorrow. So let's start with the first one, which is about copper and what copper moves mean.
Yeah. So copper. So a lot of these things are generally, I view them as givens in the market that just are things that happen. So copper it's in the walls of every one of your houses. Exactly. Dr. Copper, we call it, for those who know, we call it Dr. Copper. It's just its nickname. It's in the walls of every home. It's in every data center. When its price is rising, the builders are buying. And when it's falling, the builders are slowing down. You don't need to go through all the building permits. In fact, I actually did go through building permits, and I tested that in the back test. And building permits not only are backward looking, they're 1 month at a time. And so when you try to run a data set off of building permits, it's awful. It's actually good if you get the print exactly on it is, but they don't release it that way. So if you walk forward, if you cheat and use building permits, you can get a good signal, but that's not reality. You can't actually get those. Copper gives you a window into that real time. It's the market pricing that right up front.
So when copper goes up, materials and tech follow. That's your takeaway there. Let's go to number 2.
Yep. Credit conditions. So credit conditions are so important. The companies run on borrowed money, and the credit markets are the single most important part of the stock market that most people don't look at or even have an ability to look at. And that is myself included. And I have a Bloomberg terminal, and I don't really have a good window into the credit markets. I can look up stuff, but it's not that easy. The high yield corporate bond ETF, the HYG, that gives you a real-time look into the credit markets, into the credit conditions. When that is falling off, that's an alarm bell that should wake up. And so when I have a signal, when that sells off, a lot of the sectors will go quiet. When credit conditions are easy, you'll see a bid come in through HYGs to the high yield credit, and the healthcare and industrials will do a little bit better than most. You'll see those. So here, sector change partners. So the tech and utilities, they'll run opposite of each other when the driver in the market is fear. So when there is a high fear, people will go into utilities and they'll flow out of tech. However, if the driver is interest rates, you're going to see tech and utilities actually run together when it's favorable for both. The same goes for consumer staples and consumer discretionary. That's one of my favorite. I wrote an editorial called Why My Kids Already Know the VIX. I love that editorial. I'm going to probably send it out if you're here. I'll send that link. But that is also driven by fear. They go in opposite directions. So when fear is high, people will run to consumer staples, and they'll run away from discretionary. That makes sense. It's like your wallet, right? I'm going to go to Walmart instead of going to, instead of FND or down Madison Avenue or whatever. I don't shop there. I don't know. I live in Colorado. Instead of REI.
We'll send these to you guys after this also, so don't worry about having to write all of this down. We just want you to understand some of these correlations so you can keep your eye out for them. Right. This is just a little bit of a scoop for you. Exactly. If this, then this, so that you can grab some of these moves that might happen. Go ahead, Tim.
And when you join, we'll go at length of all these, and we'll have them in the live sessions. I'll have editorials written about them. It's super fascinating stuff to me, and I'll make it as fascinating as I can to you. Now, this one is going to be obvious to everyone. However, back in like 2004, 2005, when I noticed these things in the markets, not a lot of people looked at it, but semiconductors, they are plastered all over the news today. semiconductors. It drove the market, right? NVIDIA had good earnings last night. The chips sell first, the software sells second. When NVIDIA was just selling rinky-dink little computer chips just for gamers, nobody really paid attention to semiconductors, but we did as traders, because when the semiconductors lead, the cues follow. And when the semiconductors sell off, the cues follow. It's pretty straightforward. This is a pretty easy one. It's actually quite good in the back test. The moving averages that we use for that one. So here's one, and this one's one of my favorites because it's one of the first ones I ever tested, the initial jobless claims. So this is a weekly number that gets put out, and it's a weekly number of new layoffs. So when it rises, that means that more people aren't employed and companies are cutting back. And when it falls, it suggests the opposite. So this is faster than monthly payroll comes out. That number comes out once a month at the beginning of the month. Again, that's a whole full month look back. We already have had a few data points since that point. So using that monthly data isn't as helpful when you're trying to be active in the markets. When this is beneficial, that's a tailwind for industrials and tech. It is the first time I really looked at one of these charts overlaid on the S&P. And it was my partner at Macro, and he said, go look at initial jobless claims, add that to durable goods, and do this. And I put it all in a spreadsheet, and I thought, oh my God, that looks just like the S&P. How is that possible?
Sure. Yeah.
And he goes, that stuff drives the market. And I thought,
right.
Oh.
So there are, if you take anything away from these 5 bonuses, which I'm going to keep us moving here, Tim from Trading Macro understands a lot about the relationships between certain sectors and these connections that to a lot of people might seem not intuitive, or you just didn't understand these. So we'll send this out to you guys afterwards as a bonus to be able to make some of these connections and hopefully capitalize on some of these opportunities on your own independently. We like to give you guys some value during these events, something that you could take away that can help improve your trading as soon as tomorrow. So that's what these 5 fundamental drivers are for you guys. All right. I want to do a deep dive on a single sleeve. So getting back to what we were just talking about, you guys, with the macro gauntlet, remember all 10 of these? You can see them on your screen, looking at all 10 of them. I want to walk through the process that Tim took to put these in the macro gauntlet and how he built his filters. Because what he did is he basically put together something that on any given day when he wakes up and he checks his computer, it will tell him exactly which sleeve out of these 10 is where he should put his money that day, where he should not put his money that day, and maybe a sleeve that is moving towards something that he should put his money in. So we're going to break down one individual sleeve. We're going to start with XLE right here, which is energy. And we're going to walk you through how Tim built the criteria that would tell him to buy XLE. So I'm going to start to walk you guys through this, and then Tim's going to take over halfway through. And I'm going to start with something that's going to make your eyes glaze over, okay? Even if we have some developers or someone in the room, you might know what some of this means, okay? I'm just going to flash a couple things in a row here. This is code that Tim put together to actually build the outputs that he wanted to see on each of these sleeves. So for XLE, he did all this code that had this output. This was phase 1, okay? Here's more code, more code. This is phase 2. Tim did 9 phases for each of the 10 market sleeves. So when I was talking about 7.5 million data points and you were like, what the heck? This is what I was talking about, okay? And as he was doing this, and Tim, you and I talked earlier, I mean, you said you spent, how much time do you think you spent putting this together? It's been 6 months, but how much time were you building this?
I don't want to know. It is Python. Good catch, Lou. Yes, Claude helped me. So I had dreamed up something like this. And I had thought when Mark said, all right, come an option pit, I said, well, here we go. I'm going to learn Python. And that was it. Because I had planned on doing it. I had a coder before, and he used MATLAB, and that's what we used. But I thought, well, shoot, am I going to hire a programmer? Do I want to do that? And I did not want to do that. And then obviously we're running into this period where we have AI. And you've read, I'm sure, all of the trading firms who have tried to build hey, Claude, go build me a trading platform. Go build me something.
Sure.
You know how bad that is? I've tried it. It is horrible. You can't let Claude go do this stuff. And I have hundreds of hours of time invested with Claude trying to teach it how not to curve fit, how not to have bad looking data or mapping stuff together. It's so amazing at writing the code, but it makes the dumbest mistakes if you don't know how to catch it.
100%.
So
100%.
you gotta. I've built systems before very simply because that's how I knew how to code. Well, and I knew what to look for, because those are the things that can trip you up. And then the first thing you think is, oh, I got this great strategy. And the next thing you know, you're trading off yesterday's data, and that's usually the number one catch. So I spent a lot of time teaching Claude about macro, and Claude didn't really teach me much about Python, but I did. Now I do know quite a bit how to work my way through it. So again, sorry to go into that, but it just, if you think you can go tell Claude they will make you a Python code, dude, it ain't happening. It is.
No, I mean, I hear the saying all the time about AI, and it is only as productive as the prompts by the prompter and the intelligence of the prompter. I mean, Tim, you were telling me a story earlier about someone who showed you a trading strategy that they built using AI, and they're not a trader, and you looked at it for 30 seconds and said, here's the problems, this is the error, this is never going to work in this way. And it's just this tool, it has a different level of value when you put it in my hands versus your hands. And the reason why I show you guys all this stuff, all this code, etc., is to put into perspective the amount of work and hours and effort that has gone into this, building this tool, from someone who is capable of building this tool, is the real takeaway. So the goal at the end of this, Tim, you want to talk about like the goal of doing all of this and the question that you were trying to answer by building all these phases?
Yeah. So look, I built this tool for myself, right? I wanted to have something for myself that I could use on a day-to-day basis. I wanted to take all the information that I had up here in my head that I have observed over years and years, and then take general macro principles and then apply it. I didn't want to blanket apply it to all of it and say, here, I got a bunch of ideas, go. I wanted to go step by step, one by one, each sector, and take, okay, what makes sense? So obviously XLE, energy, right? Energy drives XLE. So crude oil, it's kind of 101. And really, could you get away with just, if crude's going up by XLE? I mean, probably you'd be fine, right? That might work, but that's going to have some problems, right? There's interest rates involved, and there's some other stuff involved. There's also other things in there that actually work quite better than just the flat price of crude. When I say flat price, I mean
the big question. I'm going to interrupt you. I'm sorry. The big question that you asked yourself that you're trying to answer is this: looking at the last 20 years of data on XLE, how could I have anticipated every upside or most upside moves in XLE over the last 20 years? Like, what criteria happened frequently before those moves took place, right?
Exactly.
And what you found basically is that you had pre-established 14 criteria of your own that you believed would anticipate money rotating into XLE. So sort of like the preview before the movie starts. You're like, okay, if I see this, then this, then this, then this, that means that there's probably going to be a move in XLE. So you really asked yourself this: in the last 20 years, how often did those 14 criteria that I put together actually happen? Like, you have a great extensive data set on XLE. How many times does this actually happen? And these were those results. Can you just break this down a little bit and explain to us what we're looking at here? And guys, we're going somewhere with this. What we want you to understand is what's inside this system. Now, a lot of times people don't even show you this, but we trust you guys to be able to look at this information and understand that why what Tim has built is so valuable. So that's why we're showing you this. So walk us through this.
Yeah, so I wanted to walk through a voting system. I didn't want any one single force to be able to vote for XLE or for XHP or whatever it might be, or whatever the sector is, whatever the sleeve is. I didn't want any one dominant vote. I wanted it to be like macro. I wanted them to come as a confluence. And so if I took 14 different signals from crude, from XLE, 85 days out of the forever, it doesn't, none of them are showing up. And 14 out of 14, they're only showing up 17 times ever, that they all come in at the same time. What I found is there's a general bell curve to how when these forces come together. And in that bell curve is the more optimal times that I found that you can use a strategy like this, where those forces combine and they align.
So what do you actually do with this information? And we're going to talk about fast macro towards the end here, Tim. I'm going to skip that piece. But the question that you ask yourself here is like, if you used each one of these criteria every time you hit as an entry, what would have happened? So Tim basically said, all right, I
Exactly.
have these 14 criteria for XLE.
Yeah.
How many times has each of them happened over the last 20 years? That's the results you're looking at here. Then he asked, what if every time I got one of these results, I bought XLE? How would it have actually performed? So he's looking at, if I use these votes as the trigger for a strategy, how would it have done? So now we're going to show you another spaghetti situation, but this one I'm going to zoom in on so you can see better what's happening. And what you noticed was what? What was the best performing?
That was a good catch. Thank you for catching me there. So 7 in here, when I got 7 out of 10 votes, 7 out of 14 votes, this was the best risk-adjusted return that I saw coming from this vote. Now you notice 12 out of 14 just doesn't happen enough. Is it okay? Sure, but I'm not trading it all. That's 12 of 14 votes all come together. A lot of these votes are by design not to be correlated to each other. They're sort of, we deduplified them so that they're coming from different sectors of the market. So doesn't happen that often. And you want the signals to combine together to be in a cohesive manner that you're getting a good solid signal for the XLE sector, sleeve in this case.
I was surprised to learn that. I don't know if you guys, so you would think the more votes that you would get, the higher conviction the move would be. So I had assumed like, oh, if I get 12 of 14 or 11 of 14, that must be a great indicator for the strategy. But as you can see, the 11 of 14 and 12 of 14 are actually at the bottom of the performance, which was surprising to me. But all of this ended up, Tim, so the highest performance here was your 7 of 14, that yellow line at the very top. So what you did is you said, okay, the best indicator that I have to buy out of these 14 criteria that I've developed, these 14 votes, is when I get 7 out of 14. So you basically assigned to XLE, you guys can see it here on the screen, you need a vote of 7 of 14 to get you into that sector, correct?
Now, look, I think it's really important to note, I didn't just randomly take 7. And so that's a really big, it's a really big distinction. I didn't say, well, what was the best? I'm going to take that one. It was a really, like, I deliberated about this quite a bit about what was the best vote, what kind of worked, what worked in the periods of times that I wanted to, what worked at the cadence that I wanted to. The cadence to me mattered a lot. And we didn't get into fast macro, but I want to talk a little bit about fast macro right now, because fast macro is not something you probably ever heard of. There's terms called short-term traders, all this type of stuff. But when you think of macro, you think of big, slow, patient, Titanic moving around. And I don't mean to use Titanic. That's the macro can do well, right? Macro can do it, but I think a big giant ship moving around. And when you think of traders, 0 DTE traders, they're fast, they're in, they're out. When I was a floor trader, I'm fast, I'm in, I'm out. And fast traders, they're good at execution. They're really good getting in the market and executing at a price, getting in, getting out. They're fast. Macro sits back, they're patient, they read the research, they do all the stuff, they're looking, they're reading, and they get the ideas pretty well right. But their execution, where they're getting in for prices, is kind of lousy. That's one thing I noticed when I first got into macro, and that's how I approached it. Was I came from a trading background, so I wanted to be more active. When you're more active, that's one of those things that you back away from some of the drawdowns. The big, hairy, I am a macro guy, and they just kind of sit through stuff. They have huge swings in volatility, and they just kind of don't care. They don't care in that. And I'm a shorter term trader, and I don't like to lose. I don't like to sit through a big drawdown. It's just not my style. So I wanted to marry the two. And so that was part of the decision-making process from this. So if you're looking at some of these trades, we'll go over a couple of trades, be like, that is kind of active. Is that really macro? And yes, this is my version of macro. This is a version of many people are trading this way. Macro, you just don't hear about it.
We call it, we're branding it fast macro. So it's basically taking the part of macro that we like, which is longer term ideas or big ideas, and pairing it with a shorter term approach, which is higher upside. We care about entry and exits. Like the two benefits of those two ways of looking at the market, we've combined into fast macro, which is what we're talking about here. Now, I want to clarify something. This is a really important question that Mar asked in the chat. They're asking, what's a vote? Where do they come from? So I want to explain this very clearly because this is really important. I want you to think of each vote as a piece of criteria. So what Tim did and what we just showed you is he developed 14 criteria for XLE that would predate, that would happen before XLE moved up. Does that make sense? Put a yes in the chat if that makes sense. Scavenger asked, does it matter which 7 of the 14 voted? No, it does not.
The vote, yeah, the vote
right?
question is a
7
good one
out of
because
14.
yeah, the vote question is a good one, and it might be confusing, and I apologize for that. It is, the signals are in there, and the votes, I call them votes because I think about it like that. A sector or a family from the market is kind of voting to say, I think it's bullish. I think it's bullish, and it's sort of, I think of it like a vote. And so as the committee votes, you're there.
And what we're going to show you now, and this is, guys, this is so important. If you don't look at macro strategies elsewhere, don't trade them. Let me just give you a spoiler about macro strategies elsewhere. A lot of them will use the same criteria across multiple sectors or multiple ETFs as their entry trigger or exit trigger. Tim is not doing that. This is not a one-size-fits-all approach. So what you're going to notice here, I just changed the screen. Each of these sleeves, each of these ETFs has different criteria. XLV has a total of 13. XLB has a total possible of 11. XLF has a total possible of 10. And each of them have a different threshold of votes or criteria that they need to hit. So XLF, in order to become a green flashing buy signal, needs 6 out of 10. Whereas XLK, which is technology, needs 5 out of 8. Throw me a yes in the chat. Even just a Y is fine. I want to see a bunch of Ys. Does this make sense? Are you guys with me? You still understanding this? These are the different criterias for each individual sleeve. And they have different criteria because it's not a one-size-fits-all approach. Okay, good. What you're seeing here is the ideal number of votes that we need to hit for each of these sleeves to turn into a yes. Okay, good. I'm seeing a bunch of yeses. Okay, good. Good. Now, Tim, we're going to connect. Let's connect some of these pieces. Why don't we? Okay. Guys, yes. We're going to go a little long. We're going to go a little long tonight, but this is exciting. So stick with us, okay? If you need to go up and get another drink, it's fine. But come back because this is important, okay? And we're just getting into the great part, which is the macro gauntlet. Now, Tim, you and I were talking about this earlier. You have a legacy in the market. You've been trading for over 25 years. You are clearly a very smart guy. You cannot, on every single day, and nor could any other human being, actually check the 6 out of 13 votes on XLV, or the 6 out of 11 votes on XLB, or the 6 out of 10 votes on XLF. You will go literally crazy, and no person can do that. So what you did is you built a tool that does it for you. And that tool is what the macro gauntlet is. So every morning, the macro gauntlet gives each of those sleeves, we can basically call it a rating. They get a rating or they get a status. And there's 3 statuses that each sleeve could receive. They can get an off status, which means it's likely to go down. You don't want to buy it. We're kind of ignoring it right now. You could get approaching, which means that it is probably 3 days or less from turning on. And you actually might have some accelerated trades that come out of that approaching status, which we'll talk about later. And then you have on, which means we are buying this or we are actively in a trade. This is very likely to go up. So these are kind of the 3 statuses that each of the sleeves could receive. So we're going to show you guys what these sleeves actually looked like today. Like we're going to show you what today's results looked like on each of the sleeves. So let's walk through them. We'll start with the off. Now, Tim, XHB is off right now. You want to tell us what we're looking at right here?
Yeah. So here is what shows up on the dashboard. This is really cool. We've got a little website link for this. This is linked to a spreadsheet that I have that has a gazillion pieces of data in it that pulls it all in. And the little speedometer that you have on there, that is a measure of the number of votes, signals that are coming in coming in for that. Right now, there's 3 of 9 on, and that one needs 5 to turn on. And so it is off. So there's not enough signals, not enough pressure building up, not enough forces to say it's time to go long XHB. So that one's off.
So let's see. We're gonna show some proof. We're gonna do a little live report card. Should XHB be off? Let's see where it's been moving the last couple of weeks. Look at that.
Yeah, XHB has been flat for a hot minute there, a couple of months. It's really been, as you know, interest rates and mortgage rates are sort of not in the best place. We have 30-year rates hitting up new highs. It's just the sentiment in general is off for XHB, and we're seeing it. I'm seeing it here in the system that I built. It is very entertaining for me to have built this system and then see what I put into it, but then look at the markets on a day-to-day basis, have a gut feeling, but then have a tool that is measuring my gut. And I obviously more often than not that I'm seeing the same thing come through on the system.
XLI is approaching, has a rank of approaching. It has 7 out of 10 votes right now. If we look at the chart on XLI, you guys can see maybe it's kind of making a bottom here and it's going to turn around. So if I check the macro gauntlet and I see this, I'm thinking to myself, okay, it's very possible that in the next few days, XLI could flip on, and this might be something that I'm getting into. So you get a little bit of a heads up here. What in the approaching category, it tells you what might be the next trade. Now let's look at a couple that are actually on right now. So we see XLB, XLV, and XLP, and you guys will notice on each of these, we kind of blacked out. There are active trades on each of these, so you can't see those right now. We blacked them out, but XLB has a 7 of 11, XLV a 9 of 13, and XLP, what is that, an 8 of 12, it looks like?
Mm-hmm.
So let's look at how each of them have performed since they turned on. So you can see here, XLB has spent 5 days in the on state, XLV 7 days, and XLP 3 days. So let's see how they look since they turned on. They're all up. XLB, it looks like, went on August 19th. It's up 4% since. That's obviously just the ETF price itself, no options. XLV went on August 19th. It's up 2% since. And XLP also went on August 19th, and it's up 2% since. So this is kind of your guys' live report card, the live proof of how the macro gauntlet has worked. Let's look at a couple more. XLE, XLF, and XLU also all on. Tim has active trades in these.
Yes. Sorry, I do. I have positions in all of these, and I could pull up my account and show you. Yes, it is in 8 right now. Did we show that yet?
Yeah, we will in just a second. So
Okay.
XLE went on August 10th. It's up 11% since, which sounds crazy, but XLE has been a massive, amazing performer over the last couple of months. And we are in a trade right now. We're going to show you more on that in just a second. XLF went on August 21st. It's up 2% since. XLU went on recently, the 19th, and it's just down about less than 1% since then. So we'll talk in a second about the horizon for these trades and how long Tim is looking for them to keep these positions on. But I want you guys to understand this report card, because at this point, Tim is basically 5 for 6 we put these on and all of them are up. One of them up significantly, 11% since we entered it. So this is the last on name right now, XLY. And this one is about even cents. So we're still waiting on this trade to pan out. So here's what I want to show you guys. That was kind of a zoomed in version of the macro gauntlet right now today. But I want to show you a couple week stretch of the macro gauntlet and how it worked and how you guys might envision yourself using this. So we're going to look at a stretch of real money trades that Tim made between June 26th and July 13th and how the macro gauntlet alerted him to them and kind of the pace of these trades. So we'll start on June 26th. Now, 9 out of the 10 were off. XLY, which is consumer discretionary, gets 1 yellow arrow there. That means it's on its first of 3 days where it's approaching a trade, okay? So XLY is creeping up on the amount of votes that it needs in order to turn fully on.
This is one of those where it's in the approaching phase and you start to get a little bit of a heads up. Hey, I think the signals are there, but part of how I designed the system was from a user experience standpoint. And what I wanted you and me, actually, I mean, I was willing to just go in and out and flip with signals, but that's kind of crazy to just to do that. I wanted to make sure that you had more of a robust signal, in a sense that I found that if you force it to lock for 3 days and it was on and green for 3 days, it's a lot more than often it's going to stick. And so I wanted to do that, and the amount of upside that I gave up by doing that to have a better user experience, it was borderline. And so it was worth to me doing it. We may do accelerated trades going forward. That's to be determined, but I found it a lot better user experience if we let the signal vote be green for 3 days in a row.
Right. So on XLY, you basically get a 3-day heads up, right? June 26th, I see we're approaching. June 27th, I see we're approaching. June 28th, I see we're still approaching. And actually, XLV is also approaching now too. We get a fully turned on June 29th on XLY. So we buy. We have an active trade. And we'll look at some of the trades in just a second. XLV is also on its 3rd day turning on. We get it fully on. That means we have an active trade. 2 on the right are turning on at the same time. And what you'll notice here, guys, is sometimes when it rains, it pours. A lot of these can turn on at once. Now, it shouldn't be a capital concern. We'll show you that in just a second, like what allocation looks like for this. But I want you to understand the pace of the experience here and how this can move, okay? July 3rd, 2 active trades, 2 approaching their final day. We get 2 buys. That means they crossed over into the number of votes needed for a purchase. July 5th, we have 4 active trades. July 6th, we have 4 active trades. July 7th, we take our first win on XLV. July 8th, we take another win on XLP. July 9th, we close XLY for a small loss. And what will happen on a loser, you guys, just like that, is XLY had the number of votes, and then it dropped off, didn't have the number of votes, and we were negative on the trade, so we close it. Simple as that.
Yep. And you can't get back in for 3 more days. And so I saw a question in the chat. I'm just going to answer it now. So these are done at the end of the day. So I'll run the sheet in the middle of the day, but for the most part, for a user experience, I wait till the close. I want the signal to lock, and then we'll go towards the end of the day. The alert will put out, and we'll do a trade at the end of the day. So it's a one-time-a-day thing. Very patient. I wanted a good user experience for myself and for a community to be able to look at something like this.
July 12th, we still have 1 active trade. July 13th, we get a close there, 86% winner. Now, I want to show you guys, we're going to walk through XLE. Tim, we're moving slow. So here's what we're going to do. We're going to do the XLE example, and then we're going to look at your full track record, and then we're going to show them the dashboard. So we're going to skip a couple things. Okay. Sound good? You with me?
Sorry.
Okay.
Yeah, that's happened with me.
It's all right. You want to be respectful of people's time. And
Yes.
We'll probably have another event next week where we'll talk about some of the things that we're not missing huge chunks. You guys are still going to get what's going on here. So let's look at an individual.
I think, a couple of people might be frozen. I do want to give it a second.
I can't do much about that. Let me know if it gets unfrozen, you guys. We should be okay. Christian, we okay on the streaming side? Guys, give me an okay in the chat if we're good. Let me know. Okay. Okay is what I want to see.
All right.
Throw me an okay.
Good.
Okay, we're going to move.
Thanks.
All right. So, Tim, let's go through this quickly, like freaking gangbusters.
All right, let's go.
XLE, we're going to look at the real money trading experience of this. So you started, Tim, trading with your own real money on May 5th. You made a separate account, you funded the account, and you started making the trades. So what you guys are going to see that we're just about to show you are Tim's real trades. So let's look at XLE. You get a signal.
I'm in. I got a signal. The green, it went up to 6 of 18. I bought options on XLE, and the signal flipped off. And so I booked my loser, 26% loser. Okay. Then I'm waiting, and I'm watching. And I'm watching the signals, and it flashes green again. So I buy some calls. I buy calls, and XLE rallies. We get a good rally out of XLE, but the gauntlet's still on. It's still on, and we have a pretty good winner. So what I do is I close that position and re-enter at a new higher strike. I take some money off the table and rebuy. It's still on, so we're watching, and it keeps going. The signal is still on, but now we had a period of time where the way that I approach these, and we'll talk about this a little later, and at length in the service, I'll go over this. But I like to use, because of the time horizon of the signals, how active it's trading, I like to use to start with the 45-day option if I can, 30 days if I have to. And then at most, I don't want to hold it beyond 30 days total. I don't want to go into that near-term option where there's a lot more decay in the options. And since you're here at Option Pit, I'm sure you know about decay and how that really compounds towards the expiration date. So on this one, what I ended up doing is I booked the 91% winner, and then I went out and I moved out a month. The signal is still long XLE, and so I'm in that trade still right now, currently. And so that's what I have on in XLE, and it's a good example of how I would handle one of these signals that went longer than normally I would expect to have, because the general cadence here is somewhere in between 9 to 14 days is about
Right.
how I decided to have the system. I really wanted it to be that way.
Right.
It's what I found worked with the data.
Right. But XLE was on here for almost 2 months. So
Yeah.
you sort of rotated in and out and rolled a little bit some of these trades. You could capture the biggest upside on each of these slices. Now, a question that we always get from you guys is, what kind of options are you trading? How can I do this? Guys, these are directional options. So these are actually the 3 options that Tim bought. One of these is still open. That's why you only see 3. But these are directional. They're calls. So this is only buying calls that we're doing inside of this. Okay?
Very simple. I wanted to keep it as simple as possible for everybody, for myself, for everybody involved.
Right, right. So you can see the performance here on each of these. We always also get questions about cost. So you can see about what for XLE these can cost for you guys. We're about 220, a little bit more expensive on the entry. And then you can see the close prices there and how long we're holding these for, okay? I do actually want to go through XLV. We'll do this kind of quickly. XLV was such a freaking ripper. I want to be able to show this. So let's go through this together now. This is also on May 5th. I think this was one of the first trades you made. XLV is the healthcare sector, and it needs 6 out of 13 votes. So while you guys are watching this, every time you see a green arrow, that means the macro gauntlet got 6 out of 13 votes, and it said, get the heck into XLV. So while Tim walks you through this chart, keep that in mind, okay? So we get the first entry here on May 5th, and pretty quickly after, the 18th, we're out. Small loser.
Yep. You're so much better at explaining these charts than I am. I just a trader. I see the signal. I get in. Green signal, I'm in.
Doing great. Green,
I'm
we're
buying
in.
calls. If it's green, I'm in. I want it, right? So I built this system for me to give me something pretty simple and easy to look at. If it's green, I'm in. If it turns off, I'm out. I'm getting out of the calls. So this one, we got this whole move in XLV. We talked about this on State of the Market. I wrote about this for the Ticker Highlight Show while this was all happening. I had trades in this whole thing. And what was amazing to me is that while I was in other stuff also trying to buy XLV, this was matching. I know this is while I was sort of building and testing, beta testing. It would go through, it would go in, it would come out. And it matched the things that I also wanted to do, not necessarily even what it was telling me to do. So that was more of a confirmation bias.
I just fast forwarded this a little bit to show them what happened here. And I'm going to rewind just for a second to show you guys 2 things. What I want you to notice is, okay, yeah, Tim is trading this in small slices. This is also over a 4-month period, though, and it's 9 trades. So 9 trades over 4 months.
It's 4, exactly.
It looks faster than it is, okay? So keep that in mind. I also want to point out here, see this pullback that happened right here after Tim takes a 51% win, okay? XLV is off during this period. It does not have the votes. Then it gets the votes right there at the bottom where that green arrow is. See that? That's when it got its 6 of 13 votes, which means we are in a trade, and then we were out a couple days later up here at the red line, 56%. And then it did it again. Look at this. Pulls back a little bit. We're already out. We got out at the top there when the signals flipped. We get another green arrow at the bottom here. We ride this up 90%. And then this one is my favorite. Little retracement, green arrow. We get a really quick winner popped up the next day, 186%.
All right, so this one was a little, can I say bad shit? So this, I don't know if you all watch the news, but this was Moderna, right? So this is in the healthcare sector. We had a lot of bullish signals, and it was getting him. And so sometimes, you can say, oh, it's lucky, but the reality is being in the right place at the right time, you tend to catch the good tailwinds, and you get trades like this as well. And so we did catch the Moderna on this one trade, and that was a monster.
We actually did get also another retracement here and another green arrow. So you are currently in an active trade on XLV right now at this point.
Yes.
I'll show you guys again. Here's the alerts so you can see. Here's the results of each of those alerts. So you can see Tim's real money track record of trading XLV over the last 4 months, basically since May 5th, 3 months. These are real money trades, you guys. These are actual trades that Tim is making on his own. Every time he gets that green arrow, he's in. He gets that red arrow, the votes drop off, he's out. Part of what Tim and I talked about is that, and Tim, you can talk about this while I pull up your full track record, which is the last piece we're going to look at before we show you guys the dashboard. Because those screenshots earlier where we're getting the votes and they're coming on and off, those aren't, we didn't make those in an AI. That is a real dashboard that that everyone will have access to. So I'm going to show that in just a second. But before we get there, Tim, one thing I want you to highlight, and I found this to be, sometimes I think pro traders like you guys can seem a little superhuman, okay? A little not human. And I think for people who watch these presentations or who come and want to learn how to trade, sometimes they might think to themselves, well, that couldn't be me. That's great for you, Tim, but I could never do that. I think people think that. And so I want to humanize you for a second in the way that you built this system, because you were telling me that something you struggle with in your own trading is you're always trying to beat the system, or you're always trying to find a way to make it better, which is a strength.
Guilty.
And also a weakness. And so when you were building this, one of the objectives you had in mind for yourself, but I think it helps other traders too, is to make this as much of a hard system as possible. Meaning, if I get these votes, I get this green and I'm in. If I lose the vote, I get a red and I'm out. You really wanted to build it that way to sort of remove your own emotional nature from the trades.
I mean, really,
that you could execute them.
I did. And I wanted this because there were so many inputs and there was so much going on. I thought, I just want a system that I can follow, that I trust, that I built, that I understand the inner workings behind it, but that I can just say, I could relieve my anxiety, and I could just, when it's green, I'm going to buy it. And when it tells me to get out, I'm out. And just, it just wanted to make it simple, like an easy button. And that's kind of what it had. That's what I got here. And it's so funny because now as I really the trader, I'm in here and kind of like, I see it doing stuff, a trader wants to figure it out. But I found that if I just let it do its thing, wins and losses, when you add them all up, you kind of go on all the trades that I've done so far. If you keep it within reason, you kind of follow the system. It's just one of those things you do. You do the trades. I'm doing the trades because that's the system. And the idea being, no one of these sectors is going to make or break it. You really want to have the flavor of all of it. It's the sort of it's the uncorrelated nature of the different sectors, the different sleeves that make it as powerful as it is.
You guys are looking now at Tim's full real money track record, okay? I have this sorted by the stocks so you can see, actually the ETFs, I guess. Let me change that. You can see each of the sectors here that he's trading, all right? So XLY, we got a couple here at the top. XLV is this grouping. And you're looking at date added, date closed. You can see the average hold time is about 8 days.
Yeah.
Entry price, close price, average return. This includes wins and loses, you guys. But what I want to point out is Tim has a 60% win rate using this strategy, real money trading. These are not back tested. These are not fake. This is real. Real money trading. He has a 60% win rate. Every time that he wins, he's winning 55% on average. And every time he loses, he's losing 29% on average. So what you should hear there is your wins, or Tim's wins so far, have been 2 times the size of his losers. Okay, you guys with me? So that averages out to about 23% per trade is the return. So I'll scroll down. You can kind of look at this. This is the activity since May 5th when Tim first started trading this with his own real money. And I know a lot of you, to join this today, we talked about Tim's performance being 13x the S&P 500. So I'm going to take a second and I'm going to break down that number for you so that you can understand where we got that and where that came from and how his performance has been 13x the S&P. Let me scroll down to the bottom here. You guys see this? We ended up replacing QQQ here with XHK. Is that right, Tim?
Sorry, it's XLK. That was a really recent one.
XLK. So we did
the real reason we did that was another user experience. The Qs are a $700 stock, and the XLK is in the 180s, and so it's the Qs are, the options are about triple the price, and so
right.
If you have a smaller account, a trade in the Qs is going to outweigh the other trades, and that you wouldn't be able to do a properly balanced portfolio with that. That was a good catch Hannah caught. I kind of, the way I was trading it was one way in terms of capital allocation, and I didn't realize that. I mean, I noticed that those trades were much bigger, but I was doing a lot less contracts. But so we replaced the Qs. It's now XLK. Those options are a third the price. But the volatility is about the same. They move. I checked it in the back test. No signal slipped. I mean, it took all the same signals, and the returns are pretty much all the same.
Yeah, so a little optimization there for you guys. I see a question about the P&L. If you put $1,000 in every trade, all of the 38 trades that Tim has made so far, you would be up $9,296. Tim has ways that he runs this portfolio in terms of his own personal allocation. So he's trading, Tim, you're trading $100,000 on this, correct?
Yeah, so
allocated.
So there's a lot of ways you can approach this. The reason I built it was for that specifically. So starting from back at that white line that you looked at with the S&P, that's where I started. And then we had the little teal line that was kind of like a really, really conservative version of this strategy. And that is a very viable way to do this. You could do that. That is not how I did 13 times the S&P. That is a way you can do it very conservatively. I was thinking about doing that to start, but then I thought, why would I put cash into this when this is a product that I can leverage? Because the drawdowns are so much. There is a limit to how much leverage you can put on there, but I've traded leverage my entire life, and that's all I've ever done. And so I don't do really well with just doing the plain vanilla stuff. But I will go through all of this ad nauseum in the live sessions about because I believe leverage is absolutely fantastic. It is one of the coolest things ever. It's like magic. With magic, if you've ever read a thing, you could really hurt yourself with magic. It's like a loaded weapon. But this leverage is amazing, and it is something that I've utilized to create some good returns, much better returns.
Some great returns. Don't sell yourself short. Great returns. Let me break down the 13x for you guys, okay? So starting with $10,000 and putting $1,000 in each of these trades, the profit is $9,200. So that brings your account total or your P&L over this period since May 5th to $19,265, okay? The S&P's performance since May 5th is up 5.72%. Now, that's a little dated number. It might be 3 or 4 days old. But Tim, since 5, so don't crucify me for that number if it's actually 6.02 or whatever right now. Tim, since May 5th, is up 92.66%. So if you look at the difference between those, if you take a 5.72, and by this point with the trades Tim has closed in the last couple of days, it's actually more like he's performed 16x the S&P 500, not 13x when we started talking about this event. But just to be fair, so to break down that number, that's how we got that number.
Exactly.
Now,
Flash is asking. Sorry, I'm just going to interrupt because Flash is asking a really good question that I thought I covered. I might not have. Sure. But at any one time, you could be getting 10 signals. It happens very rarely over a 20-year period. It's not single digits, but it's in the single percentile. 8 times that it has on now is in the sub 5% of the time. It doesn't happen this often. And so I think I said on average it's about 4. So on average you have about 4, but I wanted to book and make sure that if I had $1,000 in each, I had to run a simulation here. 1,000 in each would be 10,000 total. So you couldn't do the strategy without the $10,000 there. But the idea being, I wanted to be able to have a flavor that was going to take advantage of the options market. I wanted to get a reflective return that was built on this strategy that was going to give me the returns on the foundation of the knowledge that I had in the macro markets. So that's why tonight I'm launching this foundation, and I want you to join me. I really do. This is going to be a really fun journey. The stuff that we go through together in this service is going to change the way that you trade. It's going to add so much value to your day-to-day, how you look at markets. That part I cannot undersell enough. I may shortchange myself on returns that I put up, but I cannot overstate how important macro is to what you do on a day-to-day basis. That I will die on that hill. Like you to incorporate macro into your day-to-day is imperative, I think.
So what do you actually get inside of the foundation? Now we're going to break down a couple things for you guys, and we're going to do this a little differently than we normally do. We're going to actually just show you what you get. So the macro gauntlet that we have talked about extensively tonight, we've shown you some screenshots of it. We've shown you how it can get you into trades and keep you out of them or keep you out of bad opportunities. I'm just going to show you what the macro gauntlet looks like, okay? And this is something that everyone will get access to. This is not something that Tim's going to stream to you. It's not something that Tim will send you screenshots of. This is something that you will 100% have access to. So let's look at what the macro gauntlet looks like inside of the user interface, which is what you would have access to. So what we were showing you guys earlier that shows which tickers are on, you can see them here. Which tickers are approaching, you can see them here. And actually there's none off right now. This was from the screenshots I showed were from a couple days ago. So you guys can see, like, this is exactly what you would have access to. And you can see the trades that are active right inside of here. Now, something that Tim pointed out to me earlier that, Tim, I want you to quickly highlight is the votes here. So you can see for XLB, we have 6 out of 11 votes. And XLV, we have 9 out of 13. You want to talk about that a little bit and how you use that?
Yeah, real briefly. I mean, that's how you know whether it's mated or not. So each one has its own unique set of votes. And I don't know if you can see it on the screen, but just below there, it'll tell you what the votes are coming from, what family of the macro market they're coming from. And then obviously in the service, we'll discuss at length what those are, why we're seeing them, what are we seeing, what's playing out in the markets. Just a more chit chat than markets, but you don't even need to know that. You just you see it when it hits the threshold, it goes in. And then when it's off the threshold, you're out. I mean, it could be that simple. But we like to geek it out and we like to talk about markets and
For those of you who are thirsty for more information and want to see more details, you can also click on each of these. So if I click on XLB, it's going to take me to more of a deep dive. So I can see that XLB has been on for 7 days. During that time, it's had a 1.5% return. Again, this is not the options. This is just the actual ETF moving itself. If I scroll down, I can see the 1-year price and signal history on XLV. So I can see, okay, back in October or November 5th, it went on and it was on for this entire stretch. It caught this huge run and then it went off. It was on again here, went up for this entire stretch and went off. So you can see the history of the signals here. If you go a little lower, you can see where the votes are coming from. So commodity cycle rates. This is something Tim will go in detail with people who join the foundation, how he built the votes, where they're coming from, why he excluded certain things. He calls these kind of his vote families. So he'll talk about those with you guys. If you go a little further down, you can even see the news. So we attached a news feed here. You'll be able to click on some of the leading stories about the ETF or some of the stocks inside of this ETF that might be manipulating it to the upside or the downside and how they might be affecting your votes. Okay, so you'll be able to see all of that in here. One thing we haven't showed you yet that I'm going to tease for a second here is this positions platform. What you're able to see inside of the positions platform is Tim's history of trading. And soon, hopefully, as a foundation member, it will be your history of trading.
Yeah.
You can see how many positions are on at one time. XLP, IYR, this was something we were trading initially, XLF. You can see these and then the results over here. I'm not going to go through this too much. We can talk about this at the event next week. But I want to show you guys, this is a great way to track your progress. It's a great way to see the length of the trades.
If you scroll down a little bit, you'll see that it's like a calendar over time. So the bar is the day. That little line that's going vertical is the day. I did a little video on it. You can look through it all, and then you'll be able to see kind of what it would have felt like, what it would have been like, what you would have had on at any one given day.
Right.
Just another way to visualize the history of what it was here.
Exactly. So that's a brief walkthrough of the macro gauntlet and what you're going to get in there. Now, when you join tonight as a member of the foundation, you're also going to get a macro gauntlet video guide. Tim shot these videos. It's him walking through the gauntlet himself, how he uses it, what you should pay attention to. It's basically your cheat sheet shortcut for how to use this. Now, he'll be teaching you over the next few months all the tips and tricks, but this will get you started.
Yeah, absolutely.
Tim also has a report here on the 8 pillars. So we talked a little bit, I mentioned those families that the criteria come from. What he's going to do is today, when you join the foundation, he's going to send you a primer. This primer is going to be brief. It's like a 1-pager. It's just going to get you started on some of the criteria inside of the macro gauntlet. This is obviously something Tim already told me earlier. I have a lot I want to write about the 8 pillars. We'll be talking about them all the time. So this is just to whet your palate and get you started, is this primer on the 8 pillars inside of the macro gauntlet. Tim also has a sector breakdown. So those 10 sleeves, the 10 ETFs, he'll give you some detailed information on each of them, the largest holdings within each of them. And then obviously through the macro gauntlet, when a sector is on, you're immediately going to know what you should buy. And part of what Tim's going to be talking about and building more is, let's say XLE goes on. Tim will also talk about some of the stocks inside of XLE that might even have more upside and other opportunities he might see there. So he'll be featuring that as well. And then you guys will also have access to all the things we normally have that makes such a great experience and community. A live room, a 24/7 chat room, live replays. We will be sending trade alerts associated with the macro gauntlet. So you don't have to just sit there and watch it. This is something that will be alerted to you. Tim will be sending out update emails. You'll also have the foundation live portfolio. So as we put on trades, as we take off trades, you will see them in the live portfolio, and you'll also see them in the macro gauntlet. When we went and showed you that, and it said, okay, XLE is on, you could see the trade right there that you should have on. So all of this is the foundation. Now, what we're going to do tonight for some founding membership options. And again, you can see the summary here of everything you get. We're going to have 3 price options for you guys tonight. So let me walk through this, and then I see a bunch of your questions. We're going to take them, okay? The first option is to join as an annual member. That's $1,299 a year to be an annual member. We have a 2-year option. This is a special price. $1,799 for 2 years, guys, okay? That's a 2-year price. And you might be saying, Hannah, that's a steal for the 2-year. I know it's a steal for the 2-year. We did that on purpose for those of you that signed up, that joined, that stuck around for 90 minutes with Tim and I talking about macro. We did this for you guys, so we have a special 2-year price. We have a 3rd tier. There's a 3rd tier. For those of you that recognize the benefit of what we've shown you here tonight, and you know how valuable this can be for you, genuinely, and you're like, freaking sign me up, I'm ready. We do have a lifetime membership available. Tonight, instead of doing $2,999, we have a tonight-only deal that is applied through a code. The code is macro, and that will take an additional $500 off. So it's $2,500 for lifetime if you want that. That is tonight only. The $2,500 is tonight only. So if you click the link that's above Tim and my head wiggling that says 500 off, if you click that, that link will take you to the form that has already taken the $500 off of the lifetime, okay? So these are the 3 options. We're going to turn to the questions in just a second because I see a bunch of them. First, though, are there any questions on the membership options? I want to answer those first. We've been here for 90 minutes. I love you guys for sticking around. We got some diehards in here. I love it.
Thank you. I know
If you have pricing questions, ask them now because I want to be able to answer those. Okay. I want to see them in the chat. If you have them. Go ahead, Tim.
I'm not sure I've had a live that I didn't go over on. I think I might be able to beat Hans. I think I got Hans beat, and maybe even Andrew beat as a person who goes over more than.
Maybe you'll win a pity for that this year.
I'm gonna get a pity award. Yes.
We'll give you an in-house pity for the longest. If you guys don't know what the pity awards are, and you're like, why is that a sad thing? No,
oh no, it's
a legendary award ceremony that we host here at Option Pit. That's member centric, where we give them awards. So it's a joke, but guys, that lifetime membership is a great deal, and that will not be available after tonight. So if you want to do that, bite the bullet. Bite the bullet. I do see a question in the chat. Mar asked, this is included with Trader X. Yes. If you are a Trader X member, pat yourself on the back for past you who made a great decision. Trader X is our highest level of membership here at Option Pit. It includes every single strategy we have available. And while you're a Trader X member, you get any new strategy we launch included. So for everyone who's a Trader X, I see you guys in the chat, and you'll see them in the chat. They have a big X next to their name. If you see them with the black circle with the white X, they are Trader X. That's our highest level of membership, and you guys do get the foundation for free. So congratulations. I'm excited for you. All right, Tim, let's turn to some of these questions. Do you see any of the questions in the chat you want to start with here?
Oh my gosh. There are so many questions. So many questions. I'm going to give Rye, R-Y-S, I'm going to give him a couple of minutes because he did ask the same question
several times. Do it.
I love you, man. He keeps me honest. He is in our chats often. And so I did not ignore your question. I just didn't have time to answer it. I did leave XLC out. So he asked about the communications sector. Why did I leave that out? That was an intentional leave out. It was too highly correlated to another sector, to the tech sector, to add it in, to have it be beneficial like the other ones are in there. So it was so correlated, and it traded so similarly to the Qs. I decided to buck the trend of everybody else on earth and not include that in the service. But that's that one. I think that was probably one of the more that was a very astute question. You caught that one. I appreciate that. Hannah, if you see any, just point them out.
Yep. I'm going to start calling them out. I wanted to congratulate John and Lee. They both took the lifetime offer. Our first two buyers. Welcome to the foundation. We're so excited to have you. Flash Trader asked, what is the renewal price at end of year 1 year or 2 year? Flash Trader, great question. We always renew at the same original price. So if you take the annual tonight, $12.99, 1 year from today, August 27, 2027, you will be rebilled $12.99. You will be locking in that price as your renewal price. Okay. Same for
forever. Yes.
Forever price. Same for the 2 year. If you pay $17.99 tonight, in 2 years, you will renew for that same price. Okay. And you guys might look at these prices and think they're a little low. They kind of are low for us for Option Pit. We want more people to have access to the foundation than any other service because, and Tim, I think this is a good time for you to talk about this. There are a lot of applications in your own trading for using the foundation far beyond what we talked about tonight, just trading the 10 sleeves. Tim, you want to talk about that a little bit? Like the information that you guys are going to have at your fingertips every single morning about which sectors are leading the market and the way that that's going to help inform your other trades is it's turbocharging your trading across the board.
Hannah, if you let me talk about this, we will be here all night long. You did not just let me talk about this right now.
Okay, here, let's do this. You have 3 minutes. Give me the high point.
No, really. So coming into the service, and I'm going to answer this right now, Will, I'm going to answer your question. I'm going to do weekly sessions. And so in those weekly sessions, I will go over, not only recap what we've seen in the last week, over what's happened in the gauntlet or what's happening in the markets. I'm going to send out things that I'm seeing beyond just that. We're going to start from a foundation. And as I do it, we'll build a database, a library for anybody new who comes in, or if you kind of miss something and you want to go back to it, because there is a foundation of knowledge. There's a library of knowledge to be gained here that I've only started to begun to put down on paper. And one of the reasons I haven't kind of done that yet, because a lot of it stems from understanding where everybody in the community is at. And I really mean this when I want you guys to be part of this community. Your questions, your input, the back and forth that we have is going to make that stronger than if I'm just sitting there like a teacher. I don't believe in the teaching of that where you just sit there and expound. I want to work with everybody where they are and kind of meet them. And I want to talk about the different things that are happening in macro. I want to talk about the nuts and bolts that go behind this, how to use leverage, how I use leverage, what we're seeing in the markets. Like, just, it's kind of endless. And the fact that you're getting in here to this is the foundation. I have other things that I want to launch with Option Fit. I don't think they're going to be as comprehensive as this one. And they may even stem out of this one. That's stuff to nail down in the future, but this is going to be my baby, and it's going to be the thing that I put all my time into right now.
I'm going to rapid fire. That was great. That was brief. I think it was 2 minutes. Well done. I'm going to rapid fire answer a couple questions here. This one says, Tim, do I understand correctly that there will only be one active trade at a time in any particular ETF? So there could never be more than 10 active trades across all sleeves. That's correct. The max you could have on is 10 total.
He did pity award right here. He's gone. I'm putting him in my file. This is Rob, right? I believe I looked him up. It's Mr. Baker. He asked the best questions. He really is asking great questions. Yes, no, you cannot have more than 10 on at any one time. That is by design, and that is a bit how we measured sort of the returns that we had so far. It's how I think about leverage. It's how I think about how can I allocate capital to this. You are maxed out at 10. You most likely don't have 10 on ever. I mean, it is very rare. It'll happen, but it's very rare.
Another great question here. Signals seem on week basis, not intraday. Is that right? How many trades can we expect to be open simultaneously? I would say the average that you're going to have open simultaneously is usually somewhere between like 3 and 5, maybe 6. Tim, you have some numbers on the amount of time that none are open. And the most I think we've ever had open in your trading is 8. Is that correct?
Yeah, that's correct, which is currently right now. When you just blanket 20 years, 40%. You're in 4. And that's basically the if I averaged over time, but we can go year by year and kind of look at it in the service. We'll go through that. I'll put some of those numbers out so you guys can dig into what the back test showed. That we'll be able to answer more of those questions. But that would be, that would be one of those things that we cover in detail in the live sessions or that. And I really do look forward to that.
Neil is asking what are some of the benefits for people who paid $9. Neil, one of the benefits for you is that the prices that you see on your screen right now, you have a coupon code for those so that these won't expire on the normal timeline that they will for everyone else. So you'll have access to the prices you see right here a little bit longer. Now that will not apply to the lifetime membership that's $2,500 tonight, I don't think. If that's wrong, we'll clarify it later, but that you will secure access to this launch pricing for longer. So the $12.99, the $17.99, you'll have access to those a bit longer. Okay. Now, before we field another question,
sorry, I'm like ducking up. The sun is coming down out here in Colorado, and
I see that. Do you need to adjust your window?
I'm just jealous have blinds in here because I like looking at the wildlife. I had a bobcat out and sitting here taking a nap yesterday. It was
really. Did you ask if they wanted to join the foundation?
Can I get a picture? She's so cute. She's our like little bobcat.
We have two.
Sorry, more questions, please.
We have 2 more lifetime members who have joined since the last time I talked about this. Richard W. and Daniel O. Welcome to the foundation. As you guys are on the order form and joining the service, I get kind of delayed alerts. So I'm getting these after the fact. I do see that a bunch of you are on the order form right now. If you have questions, okay, if you have questions that are holding you back from joining the foundation, I want you to ask them. So you're probably reading the order form, filling out your information. You can still hear me talking. If you have questions that are keeping you from joining, please ask them. I want to be able to answer them. Okay. So pop them in the chat.
I do too. I don't. Yeah, I 100%. I don't want to let any question go unasked. It's a matter of getting them done so that we can.
All right, Tim. I'm gonna rapid fire some questions at you, and we're gonna answer them. Okay. I'm going through the chat right now.
All right.
Human, who is already a trader X, so you're gonna trade this, but
nice.
Human asks, what percentage of your account do you trade in this strategy?
Oh, that's a really good question. That is something that is a very personal decision. I have a totally separate account for this thing. I don't want it commingled with other stuff. When you get to know me, you will understand. You will understand how I like to segregate as many things as I can as possible. So I have this set in a separate account, and we'll go over the amount that I do in sort of different ways to think about how to do this. But that is a really personal question. It's a really hard one to answer now. If Hannah, you can tell me if I'm dodging that one. I'm not trying to dodge it.
You're not dodging it. You're not dodging it. What? So where our authority extends here for you guys, where like our personal responsibility is, what Tim can do is tell you what he does. So he'll show you the amount of capital he's allocated. He'll talk you through what he's doing per trade. And then any decisions that you guys want to make, you can kind of base them off of what he's doing, and you can keep like the relative percentages and things like that if you want to match what he's putting together. But that's a decision that you have to make on your own, just like anyone. You know your own risk reward personally, and you know what you are willing to deal with when it comes to risk and reward. Now your drawdowns
one of the things we'll go through, I'm gonna interrupt you. One of the things we'll go through in the service while you're doing it, because there's a little bit there, is walk through examples of what it would look like. And that's something I want you to feel really comfortable with, because that's what I would want to feel if somebody was coaching me how to walk through to use something like this. So we'll go
100%.
We'll definitely go in detail about that.
All right, next question. This is from Cole Prep. They asked, will you teach us to scale these trades as we go?
Can you say that again? Sorry, I'm trying to hide from this one.
Will you teach us to scale these trades as we go? I can already answer that. The answer is yes. So yes. Tim can show you how to do that. Absolutely. Absolutely. Okay, are you ready? SNPR Baker strikes again. Tim, do you choose options by ATM or Delta or some other particular formula beyond the 45 DTE point? I assume, Tim, that's something you're going to go over in detail with your foundation members. Maybe we won't 100%. Be covering it now. Okay.
100%. There's a lot of thought that goes into that. There's a lot of calculations going into that. I'm going to walk through all of that in the service. I do use at the money options, spoiler alert, but we'll go through, I'll go through in detail all of that stuff.
What other questions we have, guys? I'm going to revisit the membership option. So let me just recap everything that's available here, right? Okay. Lock in. I know it's late. Lock in. It's early for Tim. Tim's about to go to happy hour after this. Founding membership, the foundation. You get access to the macro gauntlet with all the inputs, all the outputs. You can see each ETF sleeve turning on, turning off, the trade alerts that you should be taking. You can see everything. You can click on it, see the votes. You can see the news. You can see the positions we have on at any given time, all in one place. We have a macro gauntlet video series that's Tim walking you through how to use this. You have weekly live sessions with Tim, where he will walk through the gauntlet with you, answer your questions, talk about new trades, talk about new opportunities. There are more ETFs in the market than the 10 that we trade. Tim and I talked about this the other day. There might be other exciting opportunities in new ETFs that are coming in or coming off. Tim will review some of those with you in the weekly live sessions. We, of course, have a live portfolio and that position timeline you're always going to have access to, guys, okay? And then we have these 3 bonuses, the 8-pillar primer, which you will receive in your inbox tonight after you join. We have the sector breakdown, which talks about the 10 different sleeves, what's inside of each of them. And then we do have some accelerated trade alerts. Tim, let's talk about this for a second. What is an accelerated trade? When do you think something like that might happen? Andrew has something similar to this in his series called Membership, but accelerated trades can be really exciting, and they apply to those sleeves that are maybe in approaching status,
Yeah.
and you want to cut in early and move that trade to the front of the line. Can you talk about that a little bit?
Yeah, and that's one where, look, it's a trader thing, right? So I've built this system to do a certain thing, and I built certain rules around it to do certain things. And every decision comes with a trade-off. One of the trade-offs from making a signal stick for 3 days is sometimes in that third day, like it actually happened yesterday, is like in XLI, it flipped off before the close. So if you go early, maybe you were in and you kind of had to flip out if you're going to follow the rules to the T. And so the accelerated trade would be one where I kind of see outside the macro forces are going in, or I see a news story that the machine can't read, and I see, all right, this is locking. Like, you can't backtest something like this. You can see it in the market and it's going to stick. I'm going to go accelerate it because it flipped on a bunch and it's not going to be able to get out. And I want to take this one now. So that's what an accelerated trade will hit. It's not going to happen all the time. It's going to happen on rare occasions. I've done it maybe of 38 times. I've done it a couple, but I don't foresee that happening too much. But I'm open to it because that's what we do. I'm a trader. We watch the markets. There was I think Christian answered. Is there a 14-day refund? 100. Yes, there is a 14-day refund policy for sure. I want you to have a couple of sessions with me. I want you to be able to get some time to work through the tool, to kind of digest what it is that we're talking about, to make sure this is something that you want to incorporate into your daily activity, something that you want to work into your trading. So that's, and if you don't, I don't want anybody to be upset about that. So we want to give you the opportunity to get out.
All right, Tim, now that you are quite literally in the hot seat, as I see you over there hiding behind your computer, I have a question for you.
Yeah.
And I was going to ask you this earlier and I forgot, and now I'm going to ask you now. And it's this. So one thing I always ask myself that's an important benefit to the customers is when we go through your track record, it's amazing. I can tell the track record's amazing. If I'm here watching this tonight, I have not had the opportunity to make those trades. I have not seen the benefit of the system since May 5th that you've been trading with your own real money.
Right.
So a question that I have in my mind that I think probably a lot of people here tonight have in their minds is, talk to me about what the next 30 days can look like for me, the next 60 days, the next 90 days, the next year, or heck, 2 years. We're offering a 2-year membership. What can I expect over that time period? What should I be looking for in terms of returns or potential of this system? What can I learn? Like, just set the stage for me a little bit of, kind of selfishly, what's in it for me?
Yeah. So first and foremost, it's the foundation of macro trading, right? This is the foundation of everything that I do. And so getting just the information that you're going to get, that we're talking about as the community, walking through the macro markets and what are we seeing, that's sort of what's in it for you in that sense of being able to learn this stuff. But in terms of performance, if you walk back to the first couple of slides we had, and you looked at that S&P, that buy and hold, and then you looked at the blue line that was the gauntlet. And to get into a system like that is less volatile, it has less drawdowns. It's something that participants in the market with only 40% of the amount of money, it has so much power to be leveraged. When you leverage it up into around the S&P returns over a 20-year period, it was putting up 2.5 times the S&P.
Yeah.
With the same drawdown. So with less of a drawdown maximally, but also on a day-to-day basis about what it would feel like to just buy the S&P. So you can have money sitting in the S&P, or you could take it and put it into something like this. I had money sitting in the S&P and I took it out and started to put down and to put it into something like this, because this is something that I wanted to build for myself.
Mm-hmm.
Just checking
I know you can't say things about my performance and what it's going to look like or anything like that, but Tim, just walk me through the next 7 days. Right now,
Yes.
You have 8 sectors that are on, Now,
Yes.
you talked about how you design this and they should come off and there will be other entry opportunities,
Yes.
but like it actually might be a good time, I think, to join because I could sort of get oriented to the system, the macro gauntlet, how to use it. And I'm kind of prepping for my first trade that might be coming.
Yeah.
Talk to me about the next 5 days and what can I expect? You know, like if I join right now, I'm going to get sent certain things. I get that
Yep.
primer. I'm going to get a welcome email. Like what's going to happen tomorrow? What will happen on Monday? Walk me through that.
So the first thing you're going to get is you're going to get that welcome. You're going to get access to the gauntlet. And when you see the gauntlet, you're going to see a lot of stuff. And I have a couple of videos about what to look at there. And you're going to see these positions that you have on. And there's a couple of ways to play it. But the way that I would play it if I was a new member, I would wait for something to come off. And then as the new one would trigger on, then I would go in. But I also we'll talk and have a discussion about sizing and what to think about and account sizes and all that kind of stuff. How I look at it. Again, I'm kind of limited about what I can and cannot say about what you should be doing or what your returns might look like. But they'll come in. We'll have some of these signals will pop off. We'll have them pop back on. We'll kind of talk about how the system works, the cadence, and just sort of how to think about the macro markets and how this is going to fit into the other trading that you have going on.
Okay, guys, we're going to take 2 or 3 more questions. Pop them into the chat. We've been here for, 2 hours. Tim, how you doing over there?
I feel bad. I'm fine outside the sun.
If you need to take your jacket off, no one here is going to judge you. Go right ahead. Okay, couple more questions. We'll take them. Guys, again, that lifetime membership, I'll highlight this again. The lifetime membership is tonight only at that additional $500 off, okay? So the $3,000 is $2,500. That is only for tonight. That is only for tonight. So if you want to take that, I would take it now. So far, lifetime members joining tonight. Again, guys, this is on a delay, but John F., Lee S., Richard W., Daniel O., welcome, lifetimers. Thomas Y., another lifetimer. Gail J., another lifetimer. Welcome, you guys. We love seeing you take that offer. It's a blockbuster for you. So we love it. Okay. Couple more questions. Let's take them. Couple more questions. Neil, will you give exits from the trades? Yes, 100%, Neil. Tim will be sending exits as well.
Yes, that's when the signal turns off. Not only will I send the signal out, you'll be able to see it for yourself logging in to be able to see that come through.
Exactly, which is amazing. Claude asks, LOL, where do you suggest placing stop losses? I assume that's something you'll talk about with people inside of the foundation, but it seems like the way that you're exiting these trades, Tim, is if you lose the number of votes and it falls off, you're out of the trade, right?
That's kind of your stop loss. And there was a question way earlier about, can you use this with futures? And I thought about using this with futures because futures gives you great leverage, right? So that's what I historically had used was futures to trade something like this. There's a couple of problems with that, and I can go into detail about it, but using options is a much better option because it has a built-in stop. So in a very adverse scenario, in a crash per se, not that they happen, right? Flash crashes happen. It's a thing.
Sure.
And if you don't have, this would be a much more complicated system, and I wouldn't feel comfortable at all if we were running it on futures that were way levered in that manner, because in a drawdown you have to have your stop orders put in. We're talking about stops, where your stops at. The whole measurement for that is a totally different calculus. When you have an options position, you can just kind of sit back and say, I got this on. In the god-awful event that something catastrophic happens, the most I can lose is what I have premium long. And that is, it's something to fall back on. It's the price you pay, as part of the decay. But that's why we're using options here. It makes this a whole lot easier. Something that I wouldn't do otherwise with futures. I wouldn't even attempt to do this with futures.
Gordo asks, how much is the drawdown on a 10K portfolio last 3 months? So Gordo, if you put $1,000 in every trade over the last 3 months, the biggest quote unquote drawdown that you would have seen, like the total that you could have lost, is just $3,800. That would have been the total loss. If you add up, if I put $1,000 in each trade, what would be the total loss? It would have been that. And that's still, even after that, in Tim's own real money trading, $1,000 in each trade, and you would have made 9,200. Does that make sense? So that is your total drawdown, just in the since May 5th when we've been trading this. Yep. Okay, guys, last call. There is a phone number. Actually, the phone number isn't on the screen. What the heck? It's in the chat. But if you want a payment plan, if you want to know if you have credits available, I super encourage you to call our team. The phone number is 888-872-3301. I said that really fast, so I'll say it again. 888-872-3301. Even if you're on the East Coast, they are on the phone right now. So you can give them a phone call. You're either going to talk to Tim or Steven or Drew. We have an amazing team. They'll tell you in the chat. How many of you guys have talked to Ted or Drew or Steven? They're great. So if you have questions, call them. I also encourage you, if you own a couple subscriptions with us, I encourage you to call and ask about Trader X. That's our highest level of membership. You might have some credits available from the subscriptions that you already own. And Trader X members, as long as they're an active member, get grandfathered into some new trading strategies that we launch, like Tim. So everyone who's a Trader X member right now is getting grandfathered into this strategy. They don't have to pay for this. They're getting it. So if you have a couple subscriptions, I would call and ask about that. It can be a great bang for your buck. And you get some bonus sessions with Andrew, and he does a great job. There's some individual trades for Trader X. We're going to test some new strategies in Trader X. So definitely call if you have a question about that. Okay. Yeah. I see some of the Trader X's in there talking about it. You can hear from them directly about their own experience, but it is worth it to at least call and ask about that. Okay.
Hey, if I missed your questions in the chat, which I likely missed some questions, I'm going to take them all. I'm going to get them written down. I'm going to go over them. And I think, Hannah, we're going to probably do another session.
We'll do a follow-up session to this probably next week. So we'll answer some questions. We'll probably go a little bit further into the dashboard and showing you guys how that works. We'll probably review where we're at, like have some of the trades that we were in come off, have new ones come on. We'll go through all of that. So Tim, I want to thank you. This has been quite the first launch night, 2 hours, but Thanks. There is no one I would rather spend it with. And I do think that the system that you've put together and the magnitude of it and the data that has gone into it and the hours of like testing, refining, trading it with your own real money, it sort of necessitated this long to explain it. But I also want to thank everyone who's here, whether you're sitting on your couch or watching on your phone or out at dinner or a kids practice or a grandkids game, and this is streaming. I want to thank you for sticking around. I hope that you see some of the benefits of this system, and I truly hope that you will join us in the foundation. This strategy has applications all across your trading. It does. And I hope that you see that here tonight. And I hope that we've proved that to you and that you are ready to take a step forward with the foundation, because, you know, I have really gotten to know Tim over the last couple of months. And if I know one thing for sure, this guy is going to over deliver in terms of the tutelage that he will provide, in terms of the additional information. He is going to take care of you guys. You guys know Mark firsthand, and Mark does not bring people into Option Pit who aren't going to over deliver. So feel confident about working with Tim, feel confident about the results of this strategy so far. And I want you guys to feel very excited about what this can mean for your trading, because it has large implications. So if you have not, click that button above our heads, make sure that you get to the order form. And I want to see you guys in the foundation. I think the first live session is going to be next week. We might do a special session or something on Monday. We'll let you guys know, new foundation members. But it's coming up soon. So Tim, anything you want to leave everyone with here tonight at the end of your first live webinar launch strategy session?
Of my life. I am a trader. This is not my thing. Like, this is so weird for me. I cannot tell you how overwhelmed. I am overwhelmed. Thank you for staying around here. Thank you for listening to what I had to say. Thank you for considering being part of the foundation. This is so fun for me. This is such a fun Mark is my only option, my biggest option. No,
Your
I am so
tallest
thankful.
option.
Yeah, dude, thank you so much for being here, everyone. Hannah, thank you. My God, thank you. I could not have gotten through this without you. This is exciting. This is a really exciting new chapter in my career. I know we talked a little bit about my background, but I'm so excited to share with you guys all the stuff that I've learned over the years, and you know, to hear about your journeys as well. So I think that's, if you give me an open mic, we're going to be here for a little bit.
No, I won't do that. I am going to send you some blinds though for Christmas or something, just so you know, so that you
I
don't
like
get
seeing the mountains though. It's just the
absolutely
sunset.
blasted. Well, you don't have to have them down all the time, just like when we're going to do a presentation. I mean, so
I
you're
didn't.
not like hunkering behind the computer.
This is how you know it was the first time that I really sit here at this time of day. I didn't actually know it was going to happen.
I know. He's like, what the heck? Okay, guys. Membership options are on your screen. Remember that lifetime membership expires at midnight tonight with the additional discount. Okay. So $2,500. If you're going to do it tonight. The button for the order form is above my head. It's posted in the chat one more time. If you want to give us a call, that phone number's there too. Okay. Thank you so much for all of your time tonight. We look forward to seeing you tomorrow. We will be back in the morning at 9:20 with Garrett opening. I'd trade that. And then we'll have some state of the market after that. So Tim, thanks so much for your time. And everyone, have a great evening.
Thank you.